Hello guys, welcome to my YouTube channel. It's Virex. In today's video, we are going to talk about three things. One, how to draw supply and demand zones, how to identify a valid supply and demand zones. All zones are not tradable. Yes, in this section, we're going to see or find out the zones that are tradable. Then, lastly, we are going to talk about identifying these zones in a real-time chart. In our last video, we talked about supply and demand in detail. We explained what supply and demand zones really are and where they are being spotted and the different types of demand zones. So if you are missing out or kind of confused of what is supply and what is demand zone, I suggest you go back to my previous video. You will learn it very well and then you can now come back to understand this video. How to draw your supply and demand zones. In drawing your supply and demand zones, we use two lines, the distal line and the proximal line. The distal line is the line that stays at the opening price or the wick of the base candle. Just like this is the supply and this is the supply zone, because usually supply zones is found at the top of a trend like this, at the peak of a trend. So supply zones is usually found here. So at this zone, you watch out for your base candle and the proximal line should stay at the opening price of the base candle. Now your base candle can be more than four. It can be two, three, four, five, six candles. But if there are more than six candles, just know that supply zones are not strong. That supply zone is not strong. So we watch out for your supply zones. The fewer the candles, the better the zone. So the proximal line should stay at the opening price of the candle or the wick of the base candle. Then the second line is distal line. Distal line should stay at the outer line. The distal line is the outer line that stays at the end of the at the bottom of the base candle. This is the base candle. Let me zoom it more. See that this is the base candle. The candle at the middle is referred to the base candle. So the distal line should be at the bottom here. The proximal line should be at the opening price or the wick. So you can choose to place it at the opening price, or you can choose to place it at the proximal line. They are still the same. This on how to draw your supply and demand, your supply zones. Then on how to draw your demand zone, you make use of the proximal line. The proximal line is the line that stays at the opening or the wick of your base candle in the demand zone, while the distal line stays at the end or at the wick of the wick here. That is the bottom of the base candle. So the two things you need to jot here is that the proximal line of you need to jot that in drawing the supply, the proximal line stays at the opening price, while the distal line stays at the wick, the bottom candle. And in demand, while drawing the demand zone, the proximal line stays at the opening price of the bottom of the base candle, while the distal line stays at the wick of the candle. Now, modern ways of drawing this thing, instead of drawing this kind using this kind of horizontal ray to draw this kind, you can equally use a rectangle box to draw it. Simply drag it from the bottom of the candle down to your proximal line, and you can now extend it like that. You can still delete out this proximal line and distal line, and you have your supply zone. Then equally in demand zone, since you have marked out your proximal and distal line using the horizontal ray icon line, you can now use the rectangle and draw from the proximal line to your distal line and drag it and extend it. Then you can now delete the proximal and distal line. So like this, it can be very, very, very convenient for you to follow, and there will not be too many lines in your chart. So how to identify a valid supply and demand zones? A supply or a demand zone must one lead to a BOS. BOS simply means break of scripture. I won't say break of scripture. Break of scripture means when a level takes out an opposing level, then causing a break of scripture. If you still don't understand the concept, the break of scripture concept and the change of character concept, I have a video that I have in my YouTube channel. Kindly just visit the video and you will understand the concept very well. So let's get down to it. Now, a supply or demand zone, a valid supply or demand zone, or a tradable supply and demand zones must lead to a break of structure. It must at least take out one opposing zone. Now, looking at this trend here, this is an uptrend, yes, because we have the higher high, the higher low, the higher high, the higher low, and the higher high, and we have a break of structure. This demand took out this opposing zone because there was a supply fitting here at this higher high. There was a supply fitting there. Then the market, the price took out this supply, causing what a break of structure. Now validating this demand zone, making it to be what very strong. Now the market had a swing point from here, but this swing point here couldn't break this high. So it's not if a demand zone, but it's not tradable. If I say if is a weak level because it couldn't take out this high. And we can also say when we can remember about the strong highs and strong lows, we said that when a high takes out, when a low takes out a high, that low becomes strong. So this low now couldn't take out this high, or rather, this demand couldn't take out this supply that because there is a supply fitting over here couldn't what take out this supply. Now we have what we have the demand is now weak, so we cannot actually trade this demand. Now you see what happened, that the price come back and pass through the demand, tapping into this stronger demand. Why is this demand strong? Because it has what it has a break of structure, or it led to a break of a structure, or it took out at least one opposing zone, which is the supply zone. That makes it too strong. And when it taps into this stronger zone, look at what happened. Boom, there was another break of structure. So let me repeat again. Now, in an uptrend, you identify a valid demand zone, which are identify zones that demand zones that take out opposing zones. Opposing zones will be the supply zones because we are looking at an uptrend. In an uptrend, demands take out supplies. So in this diagram, this is an uptrend, higher high, higher low, higher high, higher low, okay, higher high, higher low. Now look at what happened here. The price broke this, took out this opposing supply zone. Now we have a valid demand zone, causing what a break of structure. Now price came in here but couldn't break through, couldn't cause another break of structure. Now is what is weak because we said that a strong or a tradable supply or demand zone must take out at least one or must lead to a break of structure. Now it couldn't, that the price now reversed and broke it. Now it tapped into this valid demand zone. This zone, remember, it caused a break of structure. Now it's strong. So what we are expecting there, that the market, there will be a strong move from that zone. Now equally, same thing happened in this in a downtrend. This is a downtrend scenario. In the downtrend, we have our lower high, lower low, lower high, lower low, lower high, and lower low. Now look at what happened. Market from this lower high check out this lower low, causing what a break of structure. There was an opposing zone here, which is the demand zone. So in a downtrend, demands are being taken out, but while in an uptrend, supplies are being taken out. So now the supply took out this demand zone, causing a break of structure, now making it to be a strong tradable zone. But while reversing, while returning to that zone, there was something like the market created a new supply zone, but it's not strong. Why? Because the supply zone couldn't take out this next level here, this next lower low. It couldn't break through this low, so it's considered to be weak. Now market now reversed and now do what? Broke it. And when it broke it, it tapped into a stronger supply zone. Remember that this supply zone caused a break of structure. it took out an opposing zone. The opposing zone should be the demand zone. And when the price got to that zone, there was a massive move from there, causing another break of structure or take out another opposing zone. So this is how you identify a valid supply demand zones. Okay. This second point of how to identify the valid supply and demand zones. First, we have treated the must it must lead to a break of structure. The supply or demand zone must lead to a break of structure before you say that it's tradable. Then the second point is having a strong departure. The zone must have a strong departure. That means it must leave an imbalance or a gap. Now, what do I mean by leaving an imbalance or a gap? Take a look at this diagram. I don't know how to draw it well, but we are assuming that these are candles. These boxes that I drew, they are all what? They are candles. Okay, take a look at it now. In this candle, you will notice a difference between this candle and this candle on the invalid supply zones. Okay, this candle has a strong or a momentum move, a strong drop. This is a drop based drop. Immediately after the base candle was formed, the drop candle has a strong momentum move, causing it to leave what? An imbalance. And the imbalance simply means that there are some orders left that have not been taken. The price must surely come back here and do what? And take the orders. Same thing goes here. This is the drop bay drop, and this is the peak there. If you can rephrase back to when we treated different types of supply and demand, we say we have the reversal patterns and the continuation patterns. And in the reversal pattern, we have the valley and we have the peak. Then the continuation pattern, we have the drop base drop and rally base rally. So if you don't understand what I'm saying, you can rephrase back to my previous video or when I talk about supply and the different supply and demand zones and different types of supply and demand zones. So moving forward now, as you can see, say that this strong candle is the what? Departure candle, and it has a strong move. And this strong move simply means that there are still orders left. The big boys or the market makers still have some orders left that needed to be filled up. Market must be balanced. So market will do two different things: creating imbalances so that later it will come and balance it. Market will never leave a zone imbalanced. It will surely come back to do what? To fill up the imbalance. So what you have to do is look out for zones that have a strong departure candle. Like when they are leaving from the base, monitor the candle that is dropping from the base on the supply zone. This candle that dropped after the base candle was formed, it didn't close below the base candle. Rather, it broke the closing price of the it broke the opening price of the base candle, leaving a strong, huge move, causing an imbalance. These were a valid supply zone. Now, looking at this invalid supply zone, look at how they look like. That from the drawing you can see the difference. Okay, this is a push to the upside, yes. Then this is the base. Now we are expecting to see a strong move before we can say, okay, this is a valid zone to be traded. Like we can trade this zone, but look at what can do. It's weak. Sellers were too weak at this zone, so this zone now is not strong. There's every possibility that buyers can just come here and just break the price and keep on going higher. Same thing with this one. Normally we have a drop base drop. Look at the way this drop base drop was formed. The drop, the base. Now look at the drop. The drop was supposed to be a one huge candle that should like have at least twice the size of this base candle. Like the body should be like twice the size of this base candle, just like this one. But look at this weak candle. The buyers might still just come to retest, but due to the pressure, there was not enough pressure here. There was no imbalance. There was no order left to be filled. The buyers will just move up looking for another zone that there will be orders. So avoid this kind of supply zones. They might cause a break of structure. Yes, they might. There is a high a probability that they might cause a break of structure, but do not just depend on saying, yes, it's at least it caused a break of structure. Let me just consider it. No, you are making a huge mistake. Like, it might cause a break of structure, it might be a trap, because market is these people are wise. They always set out traps so that they can take out your money and you'll never gain. But when if you are wise enough to say that, okay, I will wait. Now I've seen that this zone have caused a break of structure. Now let me wait, see how did the candle depart from the base. Now it has a strong departure. It has an imbalance, meaning there are still order left to be filled there. You can simply place your orders there, waiting for the market to play out. Now, on the demand zone, if just like similarly to what we said on the supply zone, in order to identify a valid demand zone, either on a continuation pattern or a reversal pattern. Now, this is a continuation pattern of a demand zone. We have the rally base rally. Looking at it, we see that the rally candle was strong, then the base candle, then the departure candle is twice the base candle. Are you getting the point? It's twice the base candle. At least it's showing that it didn't close just immediately after it didn't close at the closing price of the base candle. Rather, it broke through. Showing like this is. Let me draw how it looks like. This is a trend that goes like this: up, down, up. So this is what we are dealing with now. This is definitely what we are dealing with currently. Okay, can I bring this thing out? Okay, like this. Yes, look at it here. We said that this is the base and this is the base. Can draw the base with a rectangle. Remember, we said it. Now look at the candle just broke through the base straight up. So this is a 100% valid demand zone. Let's assume that this demand zone and let her break a structure, like going up with broke a structure. You can place your order here comfortably, same as this one. Remember, this is a rally base rally, and this is what? This is the valley pattern. This valley pattern is reversal pattern. Whenever you see this kind of thing, know that the market is doing what? Is trying to reverse from being a downtrend to an uptrend. And if you notice, the first candle, the seller's candle, the base candle, it can be a bullish candle or a bearish candle. Then the departing candle, which is the bearish candle, needs to be strong enough to leave what? An imbalance. Very, 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 very important. You need to know at least the size of this departing candle should be what? Twice the size of the base candle. You can consider it what? A valid zone. Similarly, look at the invalid demand zone. How do you know that this zone is not tradable? Even though it broke a structure, it's still not tradable. Look at it. There was a drop. Yes, a drop. From the sellers drop the price. Okay, look at the base, then look at the departing candle, departing with just like they don't have enough pressure to move the market up. The buyers were not strong at this zone. So even though there was a high here that, okay, they decided to, even though like there was a high here, then the market now started going up and broke it. Fine. But just know that when this market is coming back, there is every possibility that it will break through the what? It will break through the base of this pattern, because there was no strong movement. There is no order left here again to be filled. Just put it like they are the big boys that they are not seeing any order here. So anybody that's still buying here will be targeted as what? As liquidity. The liquidity concept, we are going to treat it maybe in our next video, so do not be confused hearing about liquidity. Liquidity is just like hunting your stop loss, potential zones where the markets are looking at for your stop loss, the support and resistance, the equal highs, the equal lows, the trend lines, and so many of them, the Asian highs and the Asian lows, which we are going to talk about maybe in our next video. Now looking at this rally based rally. This kind of rally based rally does not have a strong move on the departing side. It has a strong move here, yes, and it has a base, but the departing candle is weak. This is the point I want you to note. Is weak. they all jam packed. There is no space, there is no gap, there is no imbalance, meaning there is no order left here to be filled. So what would the market makers be doing here when they come? This supply and demand zones is just well, that's like trading like banks. We are looking for an area where they have order left to be filled. Like they have left a space that they are going to fill up order there. They are going to buy from there. Then we, the retailers, we cannot use our small money and trade with them. That's the smart money concept. So if you see something like this and you're like, okay, let me place my order here. This is a zone. It costs a break of structure. um Probably it has like 80% chances that it will not going to hold. It's not going to hold. So I will advise you stay away from this kind of demand zone. Always look at for two things while drawing or choosing your supply and demand zones. Look out for demand zones or supply zones that cause a break of structure, that's BOS, and also look out for the demand zones or supply zones that have strong departure or leaving an imbalance. Leaving an imbalance simply means that they are still going to come back there to what to fill up the orders, to balance up the market. So I'm going to show you how we apply all this in our live chat while drawing our supply and demand zones. So far, we have learned how to draw our supply and demand zones and how to identify valid supply and demand zones. Now we are going to go into the real-time chart and see if we can identify these zones using these two factors we mentioned. Okay, this is New Zealand dollar on the 4 hour time frame. I just spotted a very good example of what we are talking about. Remember we said that we have two factors on how to consider your valid zones that are tradable. We have so many supply zones. We have so many. This is a supply. This is a drop base drop. Okay. These are a rally based drop, you see, but there is no imbalance, there is no strong departure. We cannot trade from there, although it caused a break of structure here. But look at this here. When the market came to this point, this is a lower low, then this is your higher low, and this lower high broke this lower low. We have a break of structure. At least it took out this demand zone here, and this demand zone, it took it out. That's number one. Break of structure. Now looking at the supply zone that caused the break of structure, there was this is the base. Let me remove this. This is the base. This is my own color. Generally the color of bullish candle is green, the bearish is red, but this is my own preference. I prefer blue and white, so you can choose your own color. So this is the bottom of the base. My distal line is my proximal line. Now why did I choose this supply? Look at the departing candle. This is the first, this is the base, and this is the departing candle. Departing candle is just twice the base of the candle. Like it has an imbalance. There are still orders left to be felt here. So the market, there are this imbalance that shows that the market will surely retrace back to fill up these orders. Now you have to place your order here. Okay, this say we sell from here, and then boom, look at what happened. They revert back, and then it now caused another break of structure. This is for what? For a change, for a downtrend. First and foremost, follow the trend. Like, let this be your nickname, a trend follower. Do not trade against the trade. Trading against the trade will make you it will mess you up big time. Like, you feel that a trend is going down in a downtrend, and you are buying while the trend is going on a downtrend. That's why you see you'll be having losses here and there. But while you stick with the trend, I observe that this trend is a downtrend. I've seen my break of structure one, second break of structure, a supply that has that caused a break of structure and also has an imbalance. So this is a very good zone to trade. So watch out for this kind of zones if you are trading a downtrend. Then Going back, I saw a good example for an uptrend. Okay, this is it. I saw that this still on 4 hours. I saw that this zone here there was a break of scripture here. Now I now said which candle, which zone caused this break of scripture. Okay, and also that this is the zone that caused the break of scripture. Sorry, I use my digital line at the wick here, then my proximal line at the top here at the base. Now look at what happened. There was an imbalance. Look at the big candle you get. Look at the big candle. Now there was an imbalance. The market has to come back and fill this balance, and then you what start going in the reverse in the direction of the market. So do not ignore the trend. Not just because you saw a strong imbalance or a strong departure candle or also a break of structure that is against the trend. I say, oh, this is an example. There is 70 or 80% chances that you're going to take a stop loss on that trade, because market can be very, very tricky. So they always use the two factors to consider your tradable zones. And I would like to tell you this. Yeah, this is a very good setup. You can use it to trade in all type of markets. You can use it to trade the stock market, the forex, the financial currencies. You can use it to trade the indices and also the cryptos, because I received the questions when asking me, can I use this strategy to trade crypto? Yes, you can use it to trade crypto, but you know that crypto is highly volatile, so you have to be very, very careful while trading cryptos. Now, if you have any question in this video, I'll be dropping my social handles on the description of this video. You can check it out. I'll promise I'm going to reply real fast, or you can drop your questions at the comment section. I'm going to reply real fast. And always remember, there is no holy grail in forex. Forex is a game of should I say a game of probability, yes, but what makes you good is the amount of knowledge you have, and not just having that knowledge, and also practicing that knowledge, bringing out that knowledge in your head in the physical world on the screen and be playing it out. Always back test. Whatever thing I've told you is based on back testing. So I back tested the strategy. I saw that it's working. So you should back test it and see that it's working for you. Fine, you are good to go. Do not pick up a strategy you did not backtest. Always backtest your strategy. Now, thank you for watching this video. If you like this video, just leave a thumb button and subscribe. Thank you.